Hey guys, welcome back to Charlotte Mortgage Insights. Hope you guys are doing well today. We are almost in June. Already half of the year is gone, and a lot of people are kind of wondering, hey, what's going on with the real estate market? What's going on with the mortgage market? And today's topic today, guys, is just a general conversation about where we are seeing things happening out there in the market. As we got boots on the ground from the real estate side and the mortgage side. And what I will tell you right now is real estate will never change. It'll always be location driven, right? So overall, the market is very, very stable, I would say. We've got pockets of properties that are selling over asking price. And Stephen, you'll talk about this in a minute. We're seeing a lot of buyer activity in areas like Ballantyne. Those areas are always hot. And even in the market that we've got with rising interest rates, it's still hot. And then we've got other properties that we have listed that are taking longer to sell. So we just want to have a general conversation and give you guys what our perspective is. So Stephen, what can you add to what I just talked about?
Yeah, I mean, rates are coming off a 9-month high. So amid the crisis with Iran, right, we saw some turbulence, and timing is always timing, right? As soon as we got the rates to the lowest point they'd been, then there's always something in the economy that's not part of the forecast, right? Not part of the plan. We've been hearing for a while, the rates are going to drop, the rates are going to drop. Well, they did. And then circumstances out of our control, an act of God, came in and changed that. So right now, what I tell my customers on a day-to-day basis, and there's much more to it, right? There's much more to it. But the thing that most people feel the most pain is gas prices right now. Like when you go to fill up your car, you're like, golly. Well, that's the same thing with mortgage rates. So like the good news is as that falls, so will mortgage rates. But, to make it human, most people are like, yeah, the pump's high right now. That's where rates are at. But they're not at the highest point we've seen in the last, we're off that high. So there's a lot of positivity coming. We're still in the mid sixes, I would guess, depending on your individual credit score, loan type, down payment, all those things. So we're nowhere near, into the sevens and even approaching the eights where we had been. But, like human nature, when you touch the bottom, then that's where you want to be at. But there's lots of activity. We are getting tons of phone calls, lots of applications. There is still demand for housing. And I think you guys can see that on your end, Brian, as well, right?
Yeah, for sure. Like last week, pending home sales came out. The numbers came out and they were up year over year from last year. Now, I will say, like a lot of people that watch our channel are probably first-time home buyers, and interest rate is the number one driver for those folks making a decision on purchasing. So just to give you all an idea, just checking interest rates today, this is Mortgage News Daily. This is kind of the high-level snapshot of kind of where things are. So like the average 30-year fixed rate today, if you have good credit, putting 20% down, you're going to be like 6.65. Now, as we're recording this video, the market is doing well today, so I expect these rates to drop. And if you do go FHA, which a lot of people do, you're still just over 6% on FHA and just over 6% on VA. So the rates are still decent, right? So I just wanted to kind of share that with everybody because some people don't really follow rates like we do. I mean, this is what we do every day, so we kind of track it. But every day, guys, rates can change, and it all comes down to what economic news is happening. Now, we kind of talked about already the conflict going on in Iran, right? If that deal gets reached anytime soon, we are going to see gas prices come down. We are going to see mortgage rates likely follow suit. So, we were sitting, these rates I just showed you, 8 weeks ago, or maybe 12 weeks ago, we were at 5.99 on that 30-year fix. So rates can fluctuate very rapidly and they can come down very rapidly too. So, but as far as like inventory goes, we're not seeing a massive ramp up in inventory. So, there's more options than there were obviously than 2 years ago, but not like a tremendous amount, which is what's keeping the home prices stable. You're going to see out there, if you watch some national news, you're going to see that home prices are falling in all of these other markets, and some of them are. Like Austin, Texas would be a good example. Home prices there are falling. But in Charlotte, we're still around a 2% year over year annual appreciation. So anyway, in the market that we're in right now, we are seeing a lot of seller paid closing costs because some houses are sitting on the market longer and sellers are willing to give concessions. Stephen, are you seeing that on deals you're getting in the door?
We are. And, seller paid closing costs can be utilized a couple different ways. Number one, just simply cover the closing costs, the standard closing costs, lender fees, attorney fees, title fees, all taxes, insurance, all the things that, are in addition to your down payment. So that's an easy button fix. Just lower your cash out of pocket. You can also use a temporary rate buy down, which is paying a discount point to buy the rate below where the market would be. And you get that forever. Or there is a 2-1 buy down where you use the seller's money to essentially lower your rate 1 or 2%. So the sellers still want to sell houses. In some houses, Brian, we've had this past weekend, actually, we had 3 customers that went into a highest and best situation, and they were comfortable with their offer and somebody else wanted to pay over to get the house. So like you said earlier, location and then desirability of the house, right? Like, is it ready to sell? Is it to the nines? Is it to the trends? To somebody they're going to pay extra to get it. So as crazy as the market's kind of disconnected, some homes don't sell and the sellers are willing to give the farm away. And some houses, the day they hit the market, you better be ready to bring top dollar because everybody else wants to. But there's lots of options and you don't have to do anything you don't want to do. But I would say 9 out of 10 of our transactions on the buyer side have seller paid closing costs. Maybe not max, but the seller's doing something to help them bridge the gap, either with interest rate or cash out of pocket. And to me, that's powerful because that's negotiating and it gives you flexibility to structure your deal however you need it as far as cash out of pocket or payment goal.
Yeah, for sure, guys. And everybody's situation is different. We are not saying, hey, go out and buy a home, right? It may not be right for you right now, but for a lot of you, it may be, right? It all depends on your own situation. But guys, if you're getting any value out of this conversation, go ahead and hit that like button and subscribe to the channel. We'd greatly appreciate that. If you want to talk more about your mortgage situation, reach out to Steven. And if you want to talk about looking for a property, reach out to me and my team. We'd be happy to get you started on your home journey. So guys, appreciate you guys watching, and we'll catch you guys in the next one.